Hello dear students, welcome to Devika's Commerce and Management Academy. Today we'll see in amalgamation one interesting problem, no journal entries. But without journal entries, we can prepare the balance sheet directly. Yes, very important and easy also. No journal entries, no tension at all. Isn't it? So this problem will work out, and after that, I'll give you one problem also homework. Don't leave it, very easy. Okay, and homework problem is also there, so stay connected. First of all, see the problem. It's given on the desktop. You can note down the problem or otherwise take a screenshot. Let me read the problem first. The Moon Company Limited and the Star Company Limited have agreed to amalgamate. Two companies are there, Moon Company and Star Company. They both have agreed to go for amalgamation. A new company called Planet Company Limited has been formed to take over the combined concerns as on 31st December 1996. These two companies are going to take by the Planet Company on 31st December 1996. After negotiations, the assets and liabilities of the two companies have been agreed as shown in the following balance sheet. After negotiations, they are saying that assets and liabilities, however, they are going to hand over. So assets and liabilities are given. So like Moon Company Limited, Star Company Limited, separately given. If you see the assets are land and building, machinery and plant, patents, goodwill, stock, sundry debtors, cash at bank. Now liabilities at share capital at the rate of 10 rupees each, 1,50,000 is there, sundry creditors, reserve fund, profit and loss account, right? Now what they're asking, show the amount payable to each company is arrived and prepare the amalgamated balance sheet of the new company. New company's balance sheet we have to prepare. Both the companies are closing. Then no journal entries or nothing, simply you have to prepare the new company's balance sheet. Balance sheet pro forma is, already half of the balance sheet pro forma already I have written. If you see, let me underline it. So liability side, first you will write equity share, equity and liabilities. Point number 1 you can remember. Under this, shareholders funds, that is share capital and reserves and surplus. Point number 2 is non-current liabilities, that is long-term borrowings. Point number 3 is current liabilities. 3 items. And on the asset side, point number 1 and 2. One is non-current assets, that is tangible, intangible assets, and the current liability. As per the given problem, we can take over. Okay. So now see the problem first. If you see the problem, you are finding only the balance sheet. Through the balance sheet, we can find out the purchase consideration, because purchase consideration is not given. Purchase consideration not given, it is must and mandatory. So let us find out first purchase consideration. How do you find out purchase consideration? All the assets taken over minus third parties liabilities taken over, so that you get the purchase consideration. Now we'll find out in the working notes calculation of purchase consideration. PC I'll write, okay. Calculation of purchase consideration for a Moon Company and Star Company. We can write assets taken over What are the companies? Moon and Star Company. Both the company. Assets taken over minus liabilities. What liabilities? Liabilities which are going to pay to the third parties. Assets taken over. Total assets will take. Moon Company. Total assets are how much? 1,13,000. We'll write 1,13,000 here. And Star Companies is here 65,000. Minus liabilities, third party liabilities. Share capital we don't touch, reserve also we don't touch, profit and loss account also no. So we have only one third party liability to whom you have to pay is creditors. Liabilities taken over is here only creditors, 8,000 and 5,000 we will deduct it. Anything else is there? So that's all. So this comes to 1,15,000 and this is 60,000. We can show it through a table. Calculation of purchase consideration. You got purchase consideration. Now, purchase consideration is how much? Both together, both the companies, this company, the Planet company has to pay the purchase consideration to Moon 1,15,000 for Star 60,000. So total purchase consideration, total PC is equal to 1,15,000 plus 60,000. How much it comes? 1,75,000. Yes, 1,75,000 is the purchase consideration. So we got the purchase consideration total 1,05,000. This is minus, no? Minus means so this is 1,05,000. 1,65,000 it is. 1,05,000. Okay. Total purchase consideration is 1,65,000. Now the company's shareholders fund, share capital. What is share capital means? This is the share capital, because they did not say anything how the company is going to make the payment. Planet company has to make the purchase consideration of this much. How they are going to make? Through the cash, they did not say. It is assumed that they are paying through the share capital only. Each share capital is here how much? 10 rupees each. Means total how many shares they are going to pay? Shares they are going to pay 1,60,000 divided by 10. It means 16,500 shares they are going to pay. Okay, so share capital is here 1,65,000 only. We will write 1,65,000 share capital. This is note number 1, purchase consideration. So this is note number 1, purchase consideration. Next, after that, whatever is there already we have written the pro forma, we have to fill. Next, reserves and surplus. Here reserve fund is given 5,000, but reserve we are not going to touch. This is transferred to the vendors only. It will be with the vendor. It will not be given to the purchaser. It will be with the vendor only. So reserve is given star companies 5,000. This 5,000 will be with the star company only. It will not be transferred. So we will not touch it here, because both the companies are taking over by the Planet company. Planet company will never touch the previous company's reserves. So ignore this. Next, this is not there. Long term borrowings, that is also not there. Now coming to current liabilities. Current liabilities, we have only creditors, under creditors. Under creditors, what do you say? Trade payable. So under trade, current liabilities, trade payable. We'll show it in the note number 2. This is note number 1. 2 is here trade payable. Simply we'll add and we'll show it over there. Trade payable. How much it is? Trade payable is under creditors. 8,000 plus 5,000. 13,000. So this is 13,000. There is nothing else to write. We'll total up this 1,78,000, right? So this is 1,78,000. What do you say? Total liabilities. Now coming to the asset side. Asset side is here. First tangible assets we'll see. Tangible assets means land and building is there. Machinery and plant. Both are tangible assets. So we'll show it in point number 3. This is 2. Now point number 3, tangible assets. Tangible assets are first one, land and building. Together if you take 50,000 and 30,000 means 80,000. 80,000. And machinery and plant. Machinery and plant. It is 20 plus 25 means 45. comes to 1,25,000. So tangible assets are 1,25,000. Is there any intangible assets? Yes, intangible assets are there. Patents and goodwill. So we can show it in point number 4. Intangible assets. Intangible assets, patents. Patents are only 11,000. Goodwill is 5,000. 11,000 and goodwill 5,000. Comes to 16,000. So 16,000 intangible assets. Next one, patents, goodwill is over. Now coming to current liabilities, we have stock. Stock means we will be showing it as a inventory. We don't write stock, okay? We write it as inventory. Inventory. Next to 5th point. What else is there? Trade, sundry debtors means trade payable, trade receivable. Sundry debtors are trade receivable. 6th point we will show. Next, what else is there? Cash at bank. Cash at bank means cash and cash equivalents. Cash and cash equivalents. This is 7th point. Okay. Now we will show more points here. Shall I draw one line here? So this is purchase consideration means share capital. Share capital, you can mention it here. And tangible assets, intangible assets. Then after that, inventory. Inventory is 5th point. So 5th point is inventory. Inventory is nothing but stock, no? So 15,000 plus 2,000. 15,000 plus 2,000. It is 17,000. So this is 17,000. Next, trade pay receivable, 6th point. Trade receivable. Trade receivable means debtors. Debtors are 12,000 plus 2,000. 12,000 plus 2,000. It is 14,000. This is 14,000. Next, cash and cash equivalent, 7th point. Cash and cash equivalents. How much it is? 5,000 plus 1,000, 6,000. 6,000. If you total up, you will get 1,78,000. So these are total assets. You might be saying, Madam, you did not total. Okay, I'll total in front of you. Okay, 1,25,000 plus 16,000, 17,000. 14 plus 6 means 20,000. It's coming to 1,78,000. Yes, I'm right. Okay, I'll give you once again the summary or gist of the same problem. Very easy. In this problem, they have given two companies. Two companies are going to amalgamate into third company, that is Planet Company. Both the companies' assets and liabilities are given. There are no adjustments at all. Nothing is said. Simply balance sheet is given. From the balance sheet, first find out the purchase consideration like this. Purchase consideration, I got 1,65,000. How do you get purchase consideration? Total assets minus liabilities. Liabilities to third parties, not all liabilities. Okay, so you got share capital. Whatever purchase consideration, that is the share capital. Share capital we have written. Then after that, look at the liabilities. And liabilities side, anything else is the reserves. Reserves we don't consider because it is taking over by another company. Okay. So reserve we don't consider. Now what else is there? Long-term liability is also not there. Only one current liability is there. So that is trade payable. It means creditors are there. Creditors totaled and we have written. Now asset side, we have lots of assets. So we have to keep the heading of assets. Always remember, underline these points. Non-current liabilities, current, non-current liability, non-current assets and current. Sorry, here I have written current liabilities. It is current assets. Summer started feeling hot. Okay, current, non-current assets, current assets, asset side. Okay, and non-current assets we have tangible, intangible, both the assets. We have just totaled tangible assets means land and building and machinery and plant. And intangible assets we have patents and goodwill. We just totaled and we have written over there. In current assets we have three current assets. One is inventory, trade receivable, cash and cash equivalents. We have shown here. Just simply totaled both the companies, whatever amounts are given. We have just totaled and we have written here. Now both the sides, assets and liabilities are same. This problem is tallied. Simple, very easy. When you get in an exam, don't leave it. Attempt this one only because pro forma we know. In company accounts we already learned it. What we have done, simply we found the purchase consideration, that is the share capital, and rest of the amounts are simply as per the pro forma totaled and written. At the end balance sheet got tallied. Want to take screenshot? Yes. If you are thorough, that one problem is given you on the desktop, you can just look at the problem. I don't want to give any explanation. Simple balance sheet is given here also. From the balance sheet, what you have to do, first find out the purchase consideration, same like this problem. Then after that, prepare the pro forma of balance sheet and whatever is given, simply post it. Answer also given in the end. Please find out the same problem, and if you are getting the answer, let me know. Answer is also given on the desktop only. So if you are getting the same answer, let me know in the comment box. With this, I am winding up the liquidation of companies. Hope it is clear. Next what? Let me know in the comment box. So my dear students, already prepared lots of subjects, and every subject, every topic I have gone and I explained to the best of my knowledge. Please do utilize and do share these videos with your near and dear friends, seniors, juniors, whoever it may be. So stay connected. Wish you good luck. Take care.